Welcome to this video, and in this video we will explain what stocks are. Stocks are basically financial investments, and when you invest in a stock of a company, you're basically buying a piece of ownership of that company. So this means when you buy a stock, you're essentially an owner of the company, even if it's just a tiny bit. So if you own some stocks of Apple and Tesla, that means that you actually own a tiny piece of every iPhone and every Model S out there. What is so great about owning stocks of a company is that if the company is performing well, the price of its stock is likely to rise. This means that you will earn a profit on your investment. Now, another way to make money with stocks is when a company pays out a dividend. A dividend is a piece of the profit that you as a shareholder receive. It is important to note that not all companies pay out a dividend, but most companies do. A company will pay a dividend if the management of that company thinks the money has no better use, such as reinvestment into new projects that help the company grow. So now you know all of this information, let's look at an example of how stocks, which are also called equity or shares, work. Here we have John, and John wants to invest some of his money in stocks. John has performed his careful research and decides that company ABC is worth his money. So John buys 20 shares of company ABC and each share costs $50 at the time of purchase, accounting for a total investment of $1,000. Company ABC proves to be a very profitable company and is growing very fast. Now John is not the only one who noticed that company ABC is such a good company. Many other investors are thinking the same thing and are looking to invest in that company. This increase in demand for the shares of company ABC drives its share price from a $50 all the way to $70. John, who has 20 shares of the company, is now a very happy man. His initial investment of $1,000 is now worth $1,400. This means that John has earned a total of $400, which is 40% on his investment. Now this is in a nutshell how you can earn money with stocks. Now when you invest in a company stock, you are partially owner. And as an owner, you share in the risk of a company. Now in the previous example with John, that turned out to go really well. However, because you share in the risk, it can also go wrong. If company ABC would go bankrupt, for example, John would have lost a lot of money on his investment. Therefore, one of the most essential points of successful investing is knowing how to identify good companies. And if you're interested in learning more about that, the link in the description offers a good place to start. So that's it for this video. We hope you enjoyed it and learned a lot. If you have any questions or any comments, please let us know.